From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report. This weekend, we're back in the studio. I'm Tyne Morgan, and here's what's in store over the next 60 minutes. Better yields?
0.4% increase in corn and beans, a little bit of a surprise. I think the bigger surprise was that they didn't lower export projections.
USDA shows a yield bump in the latest report. We'll break down that report, plus get a yield check from the field. Could fertilizer shipments soon go off the rails?
You add that threat with low river levels, and we no pun intended, could be on a perfect storm.
Exploring the possibility of a rail strike that's only a week away. A grain bin rescue. We meet a farmer who's thankful to be alive. And in John's world,
EV range anxiety.
now for the news, we begin with the latest supply and demand snapshot from USDA. The agency offering up some changes again to yields, raising the size of the corn crop. It's putting corn yields now over 172 bushels per acre, with production forecast at almost 14 billion bushels. That's up 35 million from last month. And on soybeans, that yield now 50.2 bushels per acre. Forecasters specifically saying higher yields in Iowa and Missouri accounting for much of that change. Production is now at 4.35 billion bushels. That's up 33 million. Now the numbers about what was expected from the trade. Corn ending stocks were raised slightly to 1.18 billion, but below trade expectations, with soybean ending stocks raised to 220 million, which was above estimates. Wheat stocks were lowered 5 million bushels to 571 million. That's the lowest level in 15 years. We'll take a deeper dive into the numbers coming up in our roundtable discussion.